The Self-Employment Income Support Scheme. You've applied for it, you got it, but now you are going to be taxed on it. Check out this video as Louise describes how it will be put onto your tax return. It's Self-Employment Income Support Scheme, which is the SEISS, taxable by HMRC.
Ooh.
So let's just talk about the SEISS, or Self-Employment Income Support Scheme. So people used to get that if they were self-employed, and during COVID-19 coronavirus financial crisis, the government introduced this SEIS scheme during lockdown to help self-employed with their finances, and it was a grant. What most people didn't understand is, well, how is that treated in your self-assessment tax return? And you've been doing some stuff with people who have got this SEISS. How is it treated in the tax return, and what happens with that?
Okay, so there are lots of different COVID-related benefits the government has been handing out to certain groups. And the critical first thing you need to get your head around is, have I been given a loan, which I'm going to have to pay back in full, or have I been given, for want of a better phraseology, free money / grant?
There is nothing in this world as free money. Let me tell you that now.
Not around me, there's not.
No,
that's my husband.
No.
But in terms of calculations, the first step is to really get your head around that point. Is it a loan that I'm going to have to pay back in full? Or is it something that was given to me and I don't have to pay it back? If it's the latter, i.e. it's money I don't have to pay back, then this is likely to fall under something like the SEISS. If you've been given it for activities that you conduct in your personal name, so back to my example of self-employment, then what you're going to find you're going to need to do is, it's not really free, as Simon says. You are going to have to present it in your tax returns, and you present it, for want of a better phraseology, as pure income. It's as though you'd invoiced a client and they'd paid it to you lock, stock and barrel. So you will have to capture that income, and you'll capture it, as I say, as an income. It's more often than not, it's going to sit on what's called your kind of key core pages in your tax return. So it's like the first 6 pages, but you'll actually tick you've had it most likely in your self-employment section of your tax return, and then you'll load in the value. Here's the kicker. It's treated as income. Income is taxable. So it's now going to add to your taxable gross amount of income, covering off salary, self-employment, property income, all of that stuff. It's going to sit in that pot. And of course, if it's sitting in that pot, it's exposed to tax. So it's now going to get taxed.
I mean, the worrying thing about this, from my perspective, is when you had the SEIS grant, you may have been a basic rate taxpayer. So a basic rate taxpayer paying 20% tax. But let's imagine now that the SEIS could force you to becoming a high rate taxpayer. So the government are actually getting more money out of you through the tax of increasing it from 20% to 40% that you completely wasn't expecting.
And that is a possibility. Many of the grants are means tested in the sense that they look at what you were earning previously. So they are there to a degree to replicate and replace the lost income. So you may find yourself in no worse a position than had you earned the income, had COVID not occurred and the world had continued and you'd continued to earn income. But to Simon's point, you're absolutely right. There could be situations where typically you'd expect to lose £2 in every 10. Now you're losing £4 in every 10. And all of a sudden that £10,000 grant you've just had, you're actually paying £4,000 of it back immediately almost to HMRC as tax. That doesn't feel very loving or grant-like to me, but that's just the way it is, and that's how it's calculated.